We have this question number 3 part A on alternate minimum tax. It is a question from May 2023 attempt of Inter CA direct tax or other taxation paper. It is a question on AMT. Mr. Bhagat, that means an individual age 50 years, non-senior citizen, that means basic exemption limit will be 2.5 lakhs. Sets up a unit in a special economic zone SEZ in 2017-18. That means current year financial year 22-23 will be which year? Financial year 22-23 will be the 6th year. If this is the 6th year, then assessee would be eligible to claim deduction under section 10AA at the rate of 50% of the eligible profit. It is being set up for the production of computers, that is irrelevant. The unit fulfills all the conditions of section 10AA. Section number is also given to you. During financial year 21-22, that is last year, he sets up a hospital in a district of Maharashtra with 110 beds for patients. If you recollect, this will entitle the assessee to claim deduction under section 35AD because hospital with 100 patient beds or more is one of the specified business. 100 patient beds or more, it fulfills all the conditions of section 35AD. This is also given to you. So 10AA also section number is given to you and 35AD is also given to you in case you forget the section number. Capital expenditure incurred in respect of the said hospital amounts to 65 lakhs. So 65 lakh will be allowed as a deduction, but remember 65 lakh has been incurred in the last year, so we'll have to check whether hospital became operational last year or in the current year. 65 lakh comprising of cost of land 15 lakhs and the balance was the cost of construction of building. Now we know pretty well that in 35AD 3 assets are not eligible, or rather capital expenditure on 3 assets, land, goodwill and financial instrument. These 3 assets are not eligible to deduction under 35AD. Therefore land will have to be ignored and only balance 50 lakh will be eligible for deduction under 35AD. The hospital became operational with effect from 1st April 2022, that means from financial year 2020-23 current year. Therefore, though the expenditure has been incurred last year 21-22, deduction would be allowed in the current year, provided the capital expenditure has been capitalized in the books of accounts on this particular date, the date from which the hospital became operational. And it is clarified further that the expenditure of 65 lakh was capitalized in the books of accounts on that date. That means 65 minus 15, 50 lakh will be allowed as a deduction in the current year 22-23, though the expenditure has been incurred in the last year. So assessee will be entitled to claim 10AA. How much will have to calculate? And 35AD would be 35AD amount would be 50 lakh. 10AA will have to calculate based on formula. Relevant details for financial year 22-23 are as follows. First 3 details are being given for SEZ unit. Profit of the entire unit located in SEZ is 36 lakhs. Export sales is 75 lakhs and domestic sales is 25 lakh. That means the total sales would be 100 lakhs. 100 lakh is the total sales. These 3 details are with regards to 10AA SEZ unit. If you recollect the formula, this is the 6th year. That means deduction would be 50%. 50% of total profit 36 lakhs multiplied by export sales 75 lakh divided by total sales 100 lakh. So applying this formula, assessee would be entitled to claim deduction under 10AA at the rate of 50% of 27 lakhs. It will be 13 lakh 50,000. This we have calculated, and 35AD would be 50 lakhs. That's a simple part. The profit from operation of hospital facility before considering deduction under 35AD is 90 lakh. So 90 lakh minus 50 lakh is going to be the deduction. The income here would be 40 lakhs. We'll have to calculate the income. That's it. It says compute the income tax including AMT under section 115JC and AMT credit if any under section 115JEE. Now institute people have forgotten that 115JEE is not the section for credit. The credit is available under section 115JD and not JEE. JEE is on something different. How much will be the AMT? The total tax payable by Mr. Bhagat for AY 23-24 under the regular provisions of the Income Tax Act, ignoring the provisions of section 115BAC. So we'll have to compute regular tax and alternate minimum tax, but regular tax is to be computed ignoring 115BAC, and it also says ignore marginal relief if any. Now for marginal relief I have recorded a separate video. Any which ways, let's calculate it out. 35AD business income is 90 lakh and 10AA unit income is 36 lakh. So technically the total income before claiming all these deductions is 126 lakhs. Now from 126 lakhs we have 13.5 lakh under 10AA and 50 lakh rupees under 35 AD. We have 63.5 lakh rupee deduction. So let's calculate it out. First of all, we'll calculate deduction under 10 AA working note, which should be at the end. Formula is written. Deduction would be 13,50,000. How? We have already calculated it out earlier only. Now proceeding further with part A, computation of total income and tax under regular provisions. So first of all, profit from unit located in SEZ 36 lakhs and deduction under 10 AA 75 lakh, 36 lakhs into 75 divided by 100 into 50%, 13.5. 22 lakh 50,000 will be the balance taxable profit from 10 double undertaking. This is done. And 35 AD hospital income, which is 90 lakh minus under deduction under 35 AD 65 minus 15 cost of land, balance will be 40 lakhs. So total income would be thus 62.5 lakh. On that 62.5 lakh, tax as per slab rates, because he is not opting for 115BAC. Bhagat is 50 years of age given in the first line. So as per slab rate, tax would be 16,87,500. Now 16,87,500, how did we get? So it is 62 lakh 50,000 minus first 10 lakh will be taxable as per different slab rates. On first 10 lakh, tax would be, we know pretty well, it will be 1,12,500, and balance 52 lakh 50,000 will be taxed at 30%, 15 lakh 75,000 plus 112,500 on first 10 lakh, 16,87,500. However, since the income is more than 50 lakh rupees but less than 100 lakh rupees or up to 100 lakh rupees, therefore there will be surcharge at the rate of 10%. Don't forget that many people forgot to apply surcharge. Surcharge rate will be 10% because of this particular criteria. 168,750 is your surcharge, 116,87,500 is your tax. Total will be 18,56,250. You can calculate it out. On that, health and education says 4% will be 74,250. 19,30,500 will be the total tax. Let's calculate it out. 16,87,500 into 1.10, that will include surcharge. 18,56,250 into 1.04, that will include 4%. Health and education says 19,30,500 is a tax payable under normal provisions. How much will be the AMT? Now for AMT, we need to find out adjusted total income, ATI, and ATI would mean total income as computed above, which is 62,50,000 minus, add back deductions claim under 10 AA, under 35 AD, and deduction under chapter 6A heading C. Now chapter 6A heading C is nil, we don't have it, but 10 AA deduction is 13,50,000 and 35 AD is 50 lakh. Now many people forgot to reduce the notional depreciation from 35 AD. 35 AD deduction is 50 lakh, but when you are adding back 50 lakh rupees, you need to subtract notional depreciation on the building, which would have been allowable. Building rate of depreciation is 10% if you recollect in PGBP chapter. Accordingly, 5 lakh would have been the amount of depreciation. So net benefit availed under section 35 AD by assessee is 45 lakh. Why this 5 lakh is to be reduced, we know pretty well, we have studied it in the chapter. The total amount to be added back to compute ATI will be 58,50,000, that is 1350 plus 45, and accordingly total income, that is ATI adjusted total income, would be 1,21 lakh. On this 1,21 lakh rupees, we have to apply 18.5% as a tax rate. The tax rate is 18.5% under AMT. But in case if the unit is located, assessee is a unit located in IFSC, International Financial Service Center, then 9%, and if assessee is a cooperative society, then 15%. These two not applicable in the given question. Assessee is Mr. Bhagat, so 18.5%. At the rate of 18.5%, the the alternate minimum tax will be 22,38,500. Let's calculate it around. 1,21 lakh into 0.185, 22,38,500. Now here surcharge will be 15%. Surcharge will be attracted because income is more than 1 crore and up to 2 crore. So surcharge rate will be 15% because ATI income is more than 1 crore up to 2 crore. 3,35,775 and total will be 25,74,275 plus 4% health and education says 1,02,971. So alternate minimum tax would be 26,77,246. Let's just quickly calculate this out. 22,38,500 is our alternate minimum tax into 1.15, which will include 15% surcharge. 25,74,275 into 1.04, which will include 4% health and education cess, 26,77,246. Now according to section 288B, we need to round it off to the nearest multiple of 10 rupee. So we will be rounding it off to 26,77,250. How much was the tax under regular provision? Tax under regular provision was 19,30,500, and alternate minimum tax is 26,77,500. So tax finally payable will be higher of A and B, which will be 26 lakhs. This particular amount, 26,77,250. Now question is also asking us to calculate AMT credit under 115JD. They have mistakenly mentioned it as 115JEE. That will be AMT, alternate minimum tax paid or payable, minus tax payable under regular provision, or rather regular tax, which was 19,30,500. So 26,77,250 minus 19,30,500, 7,46,750 will be the amount of AMT credit, which can be carried forward for a period of 15 years, 15 consecutive assessment years to be availed of. With that, the answer comes to an end. See you in the next video.